What's up, people? Welcome back to Investment Cause. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this has been a great week in markets. It feels good. The economic data is cooperating, and earnings that were reported have been pretty stellar. The PPI dropped more than expected, which is a good sign for inflation declining. Jobless claims dropped to their lowest level since September of last year, meaning that despite the few layoffs that were announced in the tech sector, the overall labor market and companies are showing resiliency. And Netflix led the Nasdaq higher with the broader market. This is all great. Meanwhile, though, ChargePoint ran countertrend to the broader market and posted a 2.46% drop on the week, closing at $11.09. So in today's video, I'll go over a bit of the why behind the stock underperformance this week, then cover the latest partnership ChargePoint announced. It's a big one. We'll check on the overall sentiment around the stock from analysts and close with what I'm personally doing about it. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Okay then, let's start with why ChargePoint underperformed this week. There was no bad news reported by ChargePoint. Earnings guidance communicated during the last earning call was not revised lower. Their Q4 earning report actually isn't expected until the last week of February, and this isn't a case of the stock being in the overbought zone either. So what gives? Well, this is a classic case of guilty by association. Earlier this week, Shell, the big gas and oil company, announced that it would acquire Volta, which is a competitor of ChargePoint, in an all-cash deal for $169 million. It's a ridiculous bargain when you consider that Volta went public in 2021, hit an all-time high above $15, and is now being fully bought out at the market price of 86 cents. That is ridiculous, okay? It is a great deal for Shell, an even better deal for Volta as it saves them from going bankrupt if you think about that. Where this impacts ChargePoint is that it now raises the question in some investors' mind on whether or not ChargePoint is too richly valued still, and will they ever be able to achieve profitability? The reasoning is, Volta is now getting acquired for 15 times less than it was once worth. This bear market has eroded all of its value, so could this happen to ChargePoint as well? And so the reason for the decline this week is none other than FUD, so fear, uncertainty, and doubt. The stock was up 30% year to date prior to this announcement, so it's not too surprising to see a few people book some profits on those concerns. Personally, I'm not worried at all. If you watch my last video on ChargePoint, I'll link it here, you already know that they're in a much different situation than Volta. They are the leader in level 2 charging, are only second to Tesla when it comes to level 3 charging, and are making strides towards reaching profitability with their ever so increasing revenue and customer acquisitions. Another great example of why ChargePoint is in its own league and well poised to deliver on the long-term expectations is the new partnership they announced at CES, which is a consumer electronics show this week. Well, more accurately, it's an extension of an existing partnership. The way the extension will be applied is what's new. And so Mercedes-Benz, with ChargePoint support, will build out a nationwide network of fast chargers. 400 locations across North America to start, with over 2,500 fast chargers. You can think of it as a Tesla supercharger network, but for Mercedes-Benz owners and open to the rest of the public from the onset. I'll link the full press release if you want to go and read that in details. The bottom line here is that more OEMs are realizing that the Tesla business model of scaling the charging network alongside the EV production will accelerate adoption and increase overall sales. This, of course, benefits ChargePoint as they are the best alternative for anyone not looking to partner directly with Tesla, right? So why would you pay your competitor? If you're Mercedes or Ford or GM, why would you work with Tesla? This is exactly why ChargePoint stands to benefit. Mercedes-Benz is taking the same approach as Volvo did previously, and Volvo is currently building out their DC fast charging network in partnership with ChargePoint, and they're placing their charging hubs at Starbucks locations across 5 different states to start. This is all extremely bullish for ChargePoint, and we're not even including the upside from the infrastructure bill here in the US, meant to accelerate the build out of the charging infrastructure. This will directly provide more tailwind for ChargePoint already strong performance. But you don't have to take my word for it, right? Despite the new all-time low we experienced in December at $8.07, and now the near-term FUD, the consensus rating for the stock looking at the past 3 months is a strong buy. We have 6 buy ratings, 2 hold, and 0 sell. Again, 0 sell, and that's 2 more buy ratings than we had a month ago. The price target ranges from $28 on the high end to $13 on the low end of the spectrum. The average consensus price target of $19.78 represents a nearly 75% increase from the current levels. That is some significant upside. And if you bought at the all-time low a month ago, you could now stand to over double your investment. That's something to think about. This all sounds great, but what does that mean specifically for me? What am I doing about it? My last video on ChargePoint was posted on December 4th, and at the time, this is what I said. The market is showing signs of exhaustion. We have a full trading week before the CPI number is released, yet ChargePoint is already near support with seemingly bad news in the form of the earning miss. I am more inclined to sit this one out and see where we go rather than jumping in here and buy. Even if the stock was to move a bit higher, the move would likely not be sustained. So the bottom line is this. I suspect that we'll see another broad market sell-off in the coming weeks. I don't believe ChargePoint will put a new low. However, it could likely go below the current support level, even if just briefly, and provide a better entry or buy point at $10 or less. And of course, as we've seen, we did sell off heavily in December, we did break below the support level, and I did get the lower entry point I was expecting. Patience, paying attention to the technicals, and the macro environment can help you maximize your buy points. I bought a total of 100 shares during the last major price drop. Could I have bought more? Yes, of course. However, the priority at the time was to average down on Virgin Galactic as much as possible while that stock was under $4. The 50-day moving average on ChargePoint currently sits at $10.93, so we're in a relatively decent buy zone at the moment. I will start adding more meaningfully as we continue to hover right around this level here. For full transparency, my target minimum share count on ChargePoint is 1,000 shares. I have a little ways to go before I get there, and therefore I'm a buyer at the moment. The last thing I will say is this. I am still of the opinion that this market isn't quite ready to take off just yet and go to the moon. These rallies only have so much room to run before losing momentum. That said, we are much closer to a pause by the Fed than we were 6 months ago, let's say. So I'm paying attention to the technicals, the company performance trajectory, and paying attention to the macro environment overall. This is very much a buy the dip situation for me at this point, because I would much rather add while we are at or below the 50-day moving average, rather than when we approach or rally past the 200-day, which by the way, currently sits at $13.41 for ChargePoint. And so the only item left worth noting before I go, next week, we have some pretty big earnings that could sway the markets in either direction. Namely, Microsoft and Tesla stand out for the tech sector, Visa and MasterCard stand out for the financials. My point is, the market has run a lot already, and February 1st is when the next rate hike decision will be made. Expect volatility ahead and embrace it. Volatility brings opportunity, and I would say make the best of it. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.